Hi everyone, this is Ram Martinez. So I will talk to you about the change of chart of accounts. So this video is actually a redo of what happened with the webinar last time. The reason is that because last time with the webinar we actually did it live, but there were some technical issues that happened midway. So all of the video recording were gone. So yeah, so first thing is the table of contents. So what I'm going to talk about to you today is why change the chart of accounts. What is the GFB account structure? So just to try to understand the GFB coding and old chart of accounts to new chart of accounts, then GFB survey, and then timeline and requirements, how to adjust the data, and then tools and tips and tricks. So meaning what can you do on how to do the changes. Okay, so why change the chart of accounts? First is that it will easily identify which account suits best. Second is this will make the allocation of accounts to be more specific and functional friendly. This will allow us to expand our analysis to a deeper level, such as through marketing and BD. And expand analysis and GFB dashboards will create a more collaborative financial inputs. So what is the account structure? So let's understand first the GFP coding. So this is actually the thing that you don't necessarily have to master a lot, but it's just making you guys aware on what is the logic of the codes. So the codes are pretty much divided into four parts that are similar to the old one. However, there are some changes. So if you're going, so this is a sample of a code. So 104-EX-RV-MC. So section A, so this one, the first one, is a unique reference code inserted by GFP. So meaning this part here will always be different as compared to all of the other codes. Section B is states which group the item is related to. So for example, the group can be, if this is a revenue account, then it can shows EX or exchange, MG or project management, business development or BD, internal affiliation fee revenue is IN, and then miscellaneous is NE. For cost, it's exchange again, EX, project management MG, business development BD, overhead is is OH, global fees is GL, so meaning like AINRO fees, internal entity affiliation fee costs IN, and miscellaneous NE. Assets only has five. So we got cash, long-term assets LA, receivables internal IN, long-term receivable external LR, short-term receivable external SR. Liabilities and equity is equity, liabilities internal or IN, long-term liabilities external or LR, and short-term liabilities external SR. Yeah. Okay. So the thing here is that um, if you're going to look at the codes, pretty much you will notice that the words internal is pretty much like just repeating. Like internal has just IN and IN. So yeah. Section C is just stating whether if it is the account of a revenue, so meaning RV. In this case, this is RV. Cost or CO, asset or AS, liability and equity is LE. Then the last section, which is D, is whether or not if it is for an MC account or LC account. So what is the change? What are the changes from old to new accounts? So first part is the revenue accounts. So in the revenue accounts, this is the exchange group. Um, so in the exchange group is that the changes were from pretty much just on the AIESEC side. So AIESEC pretty much just split into three parts: opportunity fee, IGV and IGE change it to opportunity fee, accommodation fee, and others, because those are the three types of revenues that you can receive for these products. Meanwhile, for IGT, you got opportunity fee and others, because you cannot receive accommodation revenue. However, the third account is actually IGT salaries slash stipend inflow transfer. We added this because we noticed that a lot of people have huge IGT revenues, but it's a lot of it were actually coming from salaries. So that is not necessarily the best type of scenario right now. So that's why we have to specify a transaction just for related to salaries. So revenue accounts, project management, and business development. So it's pretty much changes of first, in order to for us to avoid the confusion of what's happening with the BD and conference cost, and also you speak in LV. They are grouped into different accounts, which is project management and business revenue and business development revenue. So it's pretty much that if you notice in the old accounts, you speak look LV and the conferences are become the project management revenue, pretty much just the same logic. We just had the labeling. But for BD, it was split into four. So which is BD of each of the four things mentioned above. So BD for for conferences, BD for USpeak, um, also BD for other portfolio. There's no BD part for LV. As of right now, this is a relatively new business model. And then sponsorship donations was renamed into grants, donations, and subsidies because sponsorships gets a confusing label. So we have to specify it to grants, donation, and subsidies. Entity affiliation fees internal. So in this case, we basically just for the first part is the MC. So we split the part of the MC entity affiliation fees into seven. So which is IGV, OGV, IGT, OGT, IGE, OGE royalty. So meaning the fees that you get from the LC every product. Okay. Meanwhile, there's the fixed payment. This payment is pretty much based on the distribution model that was calculated for based on the budget. So the distribution model can be in multiple criteria, such as in exchange as well, but it's different to royalty because royalty is more of a revenue that happens in. It's more of a revenue that is based of what happened uh, with what sorry, royalty is a revenue that is based on what is happening along the way of the term. Meanwhile, fixed payment, there is a part of exchange there, usually based on the distribution model, but this was more of a historical data that happened. Oh, sorry, one more thing. The entity affiliation fees revenue for internal for under the LC, this orange one, is now gone because LCs don't receive this. Revenue for revenue accounts miscellaneous is basically just renaming the word other into miscellaneous. Going to cost. So first is exchange. So all of the products actually changed. So for ICX, IGV and IGE were split into marketing, accommodation, and others cost. So we put here the marketing part. But for IGT, we got marketing others, and then also an equivalent to the inflow salaries would be the salaries stipend outflow transfer. So meaning if there's a revenue that receives the money, then there should also be a cost um, that spends the money for the salaries of the interns. Meanwhile, for OGX is pretty much just split into two, which is marketing and others. So you notice that we split here the marketing part per product. This is important because there are certain times that when you're gonna do a campaign, it's not particularly specific. So we just have to like make it more specific on this one. Yeah. Next is cost accounts, project management, and business development, or previously known as partnership development. So it's pretty much the same accounts. It's just renamed. So the BD cost is actually just BD cost partnership cost. PR became PR and branding, and then the other four accounts, which is Newspeak, LP, and Conferences, just became these new accounts with a more specific word of project management. Overhead, so is for LCs is the same account. There are no changes for LCs, but for the MC there is just one additional account, which is coaching and visits. So we added the coaching and visits, so meaning these are costs where MC will travel to LCs to do coaching and visits for training, planning, elections, and other purposes that are not conferences. Okay, so meaning like coaching visits are more on for those type of uh, costs. We have to add this because there are times where this is more of a TM slash OD type of cost, and before it was not specified basically. The entity affiliation fees external is renamed it to global affiliation fee just to avoid the confusion. Yeah. So it's just to make things specified to AI and RO fees. Why did we not split these two? Is because when you're going to pay an invoice, it's gonna be the same cost anyway. Then for old LC accounts, which is for entity affiliation fees internal. So if there's an entity affiliation fees internal for revenue under MC, that means for LC this is a cost. So this is the equivalent cost accounts for that, which is the product royalties plus the fixed payments. Then the cost accounts for miscellaneous are just renamed from others into miscellaneous. Change in balance sheet accounts. Pretty much there's no change that happened except for the words of students and youth. So it's just to emphasize that we're not exclusive just for students, and also just rearranging the accounts pretty much. Those are just the changes with the assets. For liabilities and accounts, it's just um, the change were just grammars and just rearranging the accounts slightly. So, but it's basically the same accounts. Now, GFB survey timeline requirements and adjustments. So, what is the timeline now? So, this is the timeline for the whole term so far. So, let's look at the first 6 months. So, meaning the August survey, September survey, October survey, November survey, December survey, January survey, which is the deadline where it's September 18, 2019, October 18, November, December, January, February 18. Basically 18 days after that month happened. For these surveys, you will just simply use the old accounts. Okay? For the execute, what were the required items? So from all of these first 6 months of the term, sorry, first six surveys of the term is basically just required. These are the required for executed data because the budgeted data and exchange plan was asked last August survey. But for February to July, it's a similar pattern, but the change is that starting February, everything should be the new chart of accounts. Executed data would be this one. Uh, would be all required all throughout. But February as well, we're also going to ask the budget data and exchange plan. So this one, so meaning the new chart of accounts is going to start officially by the February survey or the March 18, 2020 deadline, meaning we are aligning ourselves to the LC timeline. So what is the data required in the new accounts? The data required is that coaching cycle. So this, imagine this is the coaching cycle, right? By the February and March, and then monthly surveys after March. So of course the deadline would be every 18 days after the month. Chart of accounts is new. Then the February survey, first part is we're going to ask required data is August to February 2020. So meaning 7 months executed data. So meaning for the past 7 months that already happened up to this point, we're going to ask the executed data in the new chart of accounts. So there will be redo or resubmission of the previous past accounts. Budgeted data would also be resubmitted as well in the past 12 months budgeted data. But for this one, it's not only just the MC as 12 months and then LCs are 6 months. But no, we're going to ask 12 months budgeted data for MC and LC. For the required exchange plan, required is February 2020 to July 2020 data. So 6 months exchange plan. You can also just use the same as the old numbers because there's no change in the format with the exchange plan. It's pretty much just we're just going to ask of approvals and realizations. It's just that if you want to change some numbers in the 6 months from February to July, you can change those numbers. That's fine for the exchange plan. So yeah, so as you can see by February survey, which is the March 18 deadline, there's a lot of things that's going to happen. Then after that, after all of those, will be March. Would be the March survey, which is just the executed, and then everything else will just be asking the executed data. Yeah. The thing here is that you may notice in the you may notice is that we are going to allow resubmissions of past data, and the right now for some of you who's probably asking, oh, can we resubmit the past data right now? I would actually rather recommend for you to wait until this specific survey where you are going to align to the new GFB chart of accounts, so that at least you don't have to redo and resubmit every single time, every single month. And also, I wouldn't necessarily prefer to resubmit multiple times because it would show that there is actually something wrong with your accounting as well. But if there is something wrong with your accounting, you can always contact us. Yeah, but just take note that by February survey, this is going to be a lot of data to be able to submit. So, which is 7 months executed data from August to February, 12 months budgeted data adjusted to the new chart of accounts from August to July, and then exchange plan will just be the same format. And then this is more of like if you change your exchange plan from 6 months forward, then you can change those numbers. So why are we doing this? So first is consistency in accounts all throughout 1920. So that like by the time of February survey, we can have consistency in all accounts because that would make our analysis more consistent right off the bat. Second is 7 months data would already be in the analysis, as I mentioned. And then BD marketing project management and other functions can already take advantage with the synergy in GFP data. So we wanted to be able to right away take advantage of all of the synergy with GFB and also with finance in terms of how we're doing with the analysis through the new chart of accounts. How to adjust previous data. So you might be wondering, oh my god, there's a lot of things to do, right? So these are two tables, like two ways that we recommend on how to adjust the previous data. So first method is basically the usual way of resubmission of old data. It's basically just collecting 7 months data to be consolidated to a new chart of accounts, or also just collecting just collecting the accounting data, and then you just from collecting past data from accounting software, then you align the accounts of the data to the new accounts and consolidate. So it's basically the usual way. This is a more accurate way on how you can resubmit your old data into the new accounts because you are adjusting everything as where you can have. Then the other way is proportional splitting. So what is proportional splitting? So this is more on assigning percentages to calculate how much is the division from old account to new account. So for how to do on this one, so assigning percentages on different accounts on how much they can make up the old accounts, then calculating the total to the different table. The reason why I'm suggesting this method as well is that in case you are one of those entities where your chart of accounts is not that specific or not that extensive, then it's going to be hard to specify specific numbers to the new chart of accounts, right? So the best way is to just basically just doing estimates rather than more on accuracy. So through the proportional splitting, how do we do this? So this is a demo spreadsheet. So imagine this is your data from the old chart of accounts, right? So we got these numbers from August to October. Imagine these are the numbers, blah blah blah. Then let's say we want to split IGV, right? So from old accounts, this one is IGV. These were the numbers in IGV. We imagine if you want to split it into different numbers. So you can basically just imagine this is a whole 100%. How much percentage of this goes to opportunity fee? How much percentage of this goes to accommodation fee? How much percentage of this goes to others, etc., etc. So you can basically just create a table where you allocate, where you just write down different percentages, and then that that table would be, there's another table where you calculate the equivalent amount. So for example, 125,250 times 30% would be 37,575. Same goes with multiplying 125,250 by 40% would be 50,100, and so on. And then just make sure that you need to have 100% of data, okay? On each column. So it's just an easy math, basically. Just doing proportion. Now, what if for direct revenues IGV, for you are in the MC, in case you happen to know that, and there you record numbers of entity affiliation fee revenue for IGV royalty in here as well. So what you can do, you can still write those numbers, even if the split is not necessarily does going to direct, as long as based on the amounts, you know that in this amount that you had recorded before, it has entity affiliation fees for revenues in IGV, then you can just write it there. So let's say 10% of that is from the entity affiliation fee revenue IGV. Then 10%, so 125,250 times 10% is 12,525. So yeah, and then you just make sure that everything of the total is 100%, so that if you're going to add all of the tables, it would show the original amount from the old accounts. Yeah. So this is more of like a simple way on how you can estimate how much certain how much of the old accounts are distributed or divided into the new chart of accounts, right? Yeah. So what are the advantages? So the advantages of the usual resubmission of old data in new accounts is this is gonna have more completeness and accuracy of the data since submission. Then the disadvantage is that if you are an entity that have a problem with data storage, this method may take a while. Then for proportional splitting, the useful advantage here is that this is useful for entities that have chart accounts that are short. And the disadvantage is that the accuracy of the data is not 100% the same all throughout. Alright, now going to the tools, tips, and tricks, budgeting, aligning, and consolidation. So let's explore the folder, which is GFP the new GFP chart of accounts folder. So what is the link? So you just basically just go to ice.x/chart of accounts. you would immediately go to the folder, and then in this folder it has different topics that is already in here. So first thing is you just go to the what are the new chart of accounts. So this will have the explanation of what are the new chart of accounts that I already told you before, and you can also click this spreadsheet for you to know what are the description. So there is that one tab from old accounts, then there's also another tab for new chart of accounts. You can just go through here and just read the description in case that there are some description of, or the accounts that are not understandable. So first folder was what are the new chart of accounts. Second folder is how to align and consolidate. So how to align and consolidate just explains a more specific ways on how you can do the aligning and consolidation. Aligning meaning matching. So meaning you just have to match what is the equivalent of your account or from your entity chart of account to the GFP chart of account. Please take note that we aligning doesn't mean you have to change your chart of accounts, okay? Aligning just means that you just have to know which of your accounts would correspond to the accounts of GFB. Consolidation means you just pretty much just combine numbers. So it's just more because like there can be a time where let's say you have multiple accounts but it's only equivalent to one GFB account, right? So for example, like in terms of the HR costs of the GFB account, let's say in your chart of accounts you did it like 8 HR for MCP, HR for MCVP marketing, HR for MCVP um, exchange, etc., etc. But you know that in the GFP chart of accounts we only have one HR. So consolidation is that you just add all of the numbers from your entity chart of accounts to the corresponding GFB chart of accounts. So we have a 1920 consolidation tool, and then we also have the entity submission template here as well. Please take note that the thing is that there's this one account that was actually added late, which was the wait was okay, yeah. So there's actually this one account that was added late after the webinar, which was the coaching and visits. So we added this after the webinar, which was the coaching and visits because there we received some messages that why we don't have this specific account, blah blah blah. So we added this account. Please take note that in case that you are watching this webinar, so please take note that in case that you are watching this webinar, the tools are now all updated with the new addition of the overhead account. Sorry, with the new addition of the overhead coaching and business account. Yeah. So if you already downloaded the tools and all before you watch this webinar, please recheck if you had the same updated version of the tools. It's just adding one account in the middle of the line, pretty much. So just check, make sure that you check that the codes are matching on the tools that is in the folder. So the codes and the description. So yeah, going back to this folder, so you got the how to align and consolidate. So which is this G slide. So you can just read so that it will tell you how to do the aligning and consolidation. It'll explain to you, for example, how to export data in accounting software, how to categorize GFB chart codes, how to add more accounts, how to split, how to total, how to reformat. Yeah. Then we got the 1920 consolidation tool. So this is more of a consolidation to combining all of the data from the LCs and the MC. So imagine you already got the consolidation tool from one LC, right? You can just pretty much just write here the numbers. So you will have the combination of the numbers in the LCD consolidation part. And then you, as MC, will have to write down the numbers here. Meanwhile, the entity consolidation is more of a combination of both MC and LCs, where the first columns are mainly MC revenue, MC cost, MC balance sheet, then LC revenue, LC cost, then LC balance sheet. And then there's this entity submission template spreadsheet. This is basically the same template as you have in um, the submission spreadsheets that are assigned to you. But it has the new chart of account, so at least you can use this as one of your copies so that you can try out on how to do the submission. Going to the third slide is how to do change management. So there are two files here, how to do change management G slide. So this is just explaining what is change management. We actually base this on ADCAR, and also writing down what are the benefits of the new chart of accounts, what are the potential challenges, how to do change management, how to align, how to educate your LCs, how to adjust the LCs to certain processes, and how to ensure implementation. So the chart of the change management account is more on explaining, supporting you how you can do the change management. Then there's this suggested change management timeline in case that you're confused how you can do and track your own self. So we got a timeline that we suggested for you. And of course, number 4 is budget tool template. Please take note for these budget tools. We updated the MC budget tool to add the overhead coaching visits account. It's basically the same budget tool, so you don't have to worry that much. We just have that one added account and then just fix the codes. That's pretty much it. But basically, this budget tool has, you can write down the exchange goals, revenues budget, cost budget, then revenues real or revenues executed, cost real or cost executed, then forecast. That forecast is more on how you can estimate what could happen in the next future. Execution is what actually happened, and then just comparing, um, and then just doing comparing of your execution. Balance sheet. Product performance is a specific tab for your products. Analysis is just a quick analysis of your cash flow. Um, and then there's also a GFB report template here, and also a copy of the description. For the LC budget tool, it's actually the same part as the MC, similar part, but it doesn't have the accounts that MC can only have. Same goes with the MC budget tool, it doesn't have the accounts that only LCs can have. For example, the entity affiliation fees. And also for MC has the coaching visit cost, and then LC doesn't have. So in terms of the flow of this session, is that I already talked to you about the budgeting templates. I already talked to you about aligning and consolidating where to look. I already talked to you about the change management and then the formatting of decimals. This is one thing that you can easily do because there are a lot of entities have different issues with the decimals. So this, I'm going to explain to you how to do this, okay? So imagine if you want to change the decimals from decimal period to decimal comma, which is most of the majority of the Europe. So you just click File, click Spreadsheet Settings, choose an entity that is using a different decimal. So let's say Netherlands. I'll click save setting, and then you will just have to wait a few seconds for this to redo, and then you will already notice the decimals are changed into a different format. So from a period to a comma, and the same goes with the thousands. Is that instead of instead of a decimal period, it's became a decimal comma, and then the separated for 1000s is became a period, right? But for this case, we in GFP submission we are not asking for decimal comma. We are asking for decimal period. So you just go to the spreadsheet settings, just choose any locale that is using decimal period. In this case, we're using United Kingdom. So click Save Settings, and then 1, 2, 3, it became decimal period. So you can try this out. This is usually more applicable if you're using a Google spreadsheet. I haven't seen this on an Excel function so far, but Google spreadsheets pretty much works. And yeah, that's it for this session. So if you have any more questions, you can just ask me anytime. Also, for more information with the new chart of accounts, just go to ice.x/chart of accounts. And with that, I will close this session. Thank you.